So that's the, on this one, hang on, minimum net worth. So it's not called that on the accounts, but that's what it is, and that has to be above a specified in the relevant financial covenant. Okay, you're fairly happy with that, so it's quite logical. The main principles, we separate the business operations from the financing. That stuff here is the financing. In this case, what we're interested in is whether these chaps are actually still in control of the business. If this falls below a certain level, then the actual funds within the business are dropped below an acceptable level for repayment. So we have to keep this above a certain minimum level, and that's what actually goes with the financial covenant.
So the minimum net worth and the last figure in the capital and reserve, both of them has to match, right?
Those match if your accounts are correct. That's how they're set up. Okay? Because what the owners of the business buy, they buy assets and there are other liabilities which go out of the business. The trade liabilities there, and also other forms of financing. So this will be loans and debt. I mean, it's much more complex, so loans and debt and so on. Or anything which is not an equity instrument will come here. Okay?
So in any event, if the company, let's say, is highly geared, its debt is significantly higher than its assets, the accumulated balance on the P&L account will always balance out.
It will do on the accounts if the accounts are properly drawn out.
Yeah.
That's the wonder of double entry bookkeeping. Everything has to be posted to a credit and debit account every time. So it should, in that case, always balance out.
Okay.
The problem that we get into is if these funds actually, you can get a negative equity where the value of the business is actually lower than the value of the shares, in which case the shares are worthless. So you're always actually interested in the value, and the market value, particularly in current accounting terms, of the assets less the liabilities. And what's left in the business is owned by the business. Okay? Now that's what the market value reflects in the form of share, share premium, and also the balances of the P&L accumulated in previous years. That's the market's assessment of the share value. Obviously what will happen in practice is, because it's semi-relevant information is called in the markets, which some of you may have heard of, which means that the markets are deemed to know all the information that is publicly available. The market, of course, they have access to the accounts, so the actual value of the shares on a particular day, they will reflect, or they should do if the information is good enough, the actual value of what's actually in the business. That also depends on market valuation of the assets, which is what the accounting has come to. So that's why in these days we always recognise things like brands and patents and so on, because that's part of the valuation of the business. The nearer you get to market accounting, the nearer the current accurate value of the actual business will be. Okay.
Yeah.
So we're fairly happy with that, what we're trying to measure here. Yeah? Okay, so the minimum net worth is total assets plus total liabilities on there. Ratio checks the Brazil, which seems a going concern.